Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 382 on July 3rd, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on BigBear AI Holdings, Rocket Lab USA, and Moderna Inc. And we discussed three new trades on Cipher Mining Inc, Cleanspark Inc, and MARA Holdings, what used to be known as Marathon Digital. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC at theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets finished the short week a bit higher. In fact, we are back at all-time highs. I didn't announce that last week, and I meant to. The Dow Jones Industrial Average grew 1,009 points, closing at 44,828 points on Thursday. The S&P 500 index picked up another 106 points, ending the trading week, at 6,279 points. And now it's time for the topic of the week. The topic of the week is freedom. That always seems like an appropriate topic for Independence Day. I like to pair it with the economic concept of no free lunches. When it comes to option trading, call spreads and put spreads are priced relative to one another in such a way that there are not any free profits available between their pricing. There are no free lunches. That's how it's designed. Everything has a price. And when it comes to freedom, there's always a cost. I am well aware that even if I didn't pay the cost personally, someone did. Thousands and thousands of people, possibly millions, paid with their lives in order for me to live the life that I live today. That's the case whether we're talking about the American Revolution or the Mexican-American War here in Texas, where I live, or even the Civil War. Now, as a retail trader now, I enjoy the freedom of not always having to trade. However, the cost is that sometimes I'm not in the market when I actually would have had a profitable setup. That is another can of worms for another day. But for now, I just wanted to take a minute to remind everyone that freedom is never free. There are no free lunches in economics, and there are no free lunches in life. Be sure and take a moment to appreciate those who paid for the freedoms that you enjoy over these next few days, especially if you're in the US. All right, all of that being said, let's get into the review of last week's trades. We're going to start off with the covered call on BigBear AI Holdings, symbol B as in Bravo, B as in Bravo, A as in Alpha, I as in India. At the time, the stock was trading for $5.85 per share. I looked at buying stock and selling the July 6 call at 65 cents, hoping for a return of 13.68% in 3 weeks. Well, shares of BigBear AI jumped $1.89, closing at $7.74 per share on Thursday. The call option that we sold grew $1.35, leaving us with a profit of 54 cents if we were to close the trade out immediately. Now, our maximum profit on this trade is 80 cents, which means we could increase our current profit by nearly 50%. And as another point of clarity, if, for instance, since you sold that call option, if someone exercised that call, they would actually take your stock and you would exit the trade at your most profitable economics. That's actually a positive thing when that does happen if you're in a covered call situation, unless you are hoping to sell additional call options in the future. But at this point, we agreed to sell stock or transfer that stock at $6 a share. So with us so much higher, it's not going to happen. So getting assigned and giving up your shares that way would actually be very clean. Now, we are well above our break-even point, and this trade is working out even better than planned so quickly, right? Now, with 2 weeks left until expiration, you really don't need to make any adjustments. However, sometimes it's worth taking money off the table just to avoid the possibility of it going back lower, the possible volatility of an expiration week. Now, I'm looking to stay in a bit longer with the understanding that I'll exit at the slightest reason for concern on this trade. We've made money, and I don't like giving up money that we've made, but I definitely want to capture the full profit if possible. So all is well so far on this trade. No adjustments are needed at this time. Next up, we have the credit spread on Rocket Lab USA, symbol R as in Romeo, K as in Kilo, L as in Lima, B as in Bravo. At the time, the stock was trading for $35.38 per share. I looked at selling the July 35-34 put spread at 38 cents. That could give us a maximum possible loss of 62 cents per spread. Shares of Rocket Lab grew 28 cents, ending the trading week at $35.66 per share. The out-of-the-money put spread that we sold is still out of the money. The stock moved around a bit this week, but managed to finish above our break-even point, so that's great. No adjustments are needed at this point. I'll definitely keep a close watch on this stock price. If the trade goes against me at any point or even starts to approach my break-even point, I'll definitely sell a call spread to offset the loss and limit the total loss. That'll create the iron condor. Now, that's the usual plan. Sometimes I might get a bit more creative than that, but it's good to have a plan and just to stick with it if it's working. So no adjustments are needed on this trade so far, but definitely I'll have to be aware and track stock over the next 2 weeks until expiration. And finally, from last week, we had that debit spread on Moderna Inc., symbol M as in Mike, R as in Romeo, N as in November, A as in Alpha. At the time, the stock was trading for $27.16 per share. I looked at buying the July 26.5-27 call spread for 32 cents, hoping for a maximum gain of 18 cents, or that's a 56.25% return in 3 weeks. Well, shares of Moderna jumped $3.33, ending the trading week at $30.49 per share. The in-the-money call spread that we bought is now deep in the money. And with 2 weeks left until expiration, this spread should be a lock. Now, no adjustments are needed at this point. It's still important to track the stock over the next couple of weeks, just in case we need to manage the trade at some point. So far, so good. It's also good to track the spread itself because there might come a time when you can actually either close the trade out fully or even buy the put spread of the same strikes and create a box that actually locks in the full price or good solid profit for you. So keep an eye on it, until a trade is fully expired, right? Until we're at expiration, you have to manage every position that's open. Don't ever count your eggs before they hatch. Trust me, I have seen it go awry more times than I like to admit. So, all right, well, that is the review of last week's trades. That this past week was a short trading week due to the Independence Day holiday, which is tomorrow on July the 4th. So happy July 4th for all of you in the U.S. Now, we are only 2 weeks from July expiration on July the 18th. So this is our last week using the July 18th expiration. The shortened time to make any adjustments means that these trades that I'm discussing today are a bit riskier than normal. Next week, we will start looking at August trades for the monthly options in August. So let's go ahead and dive into some July trades, our final July 2025 monthly option trades. It's crazy. Now, we'll start off with the cover call. I'm looking at Cipher Mining Inc., symbol C as in Charlie, I as in India, F as in Foxtrot, R as in Romeo. Stock ended the week at $6.05 per share. I'm looking at buying stock and selling the July 6 half call at 40 cents, hoping for a return of 14% in 2 weeks. Now, you enter this trade by buying stock for $6.05 per share and selling the July 6 half call at 40 cents. This trade makes the most money if stock prices finish above $6.50 per share. The break-even price is $5.65 per share. In real terms, the stock purchase will require $605 and you'll collect $40 for selling the option. And as a side note, people often ask me why I choose these covered calls on such low price stock. And it really is a reminder. My goal is to send out a clear notice or reminder to people out there listening to the show that you do not need $10,000 to start trading options. Here, this trade I just mentioned if you can buy that 100 shares of that stock, which is where the $605 comes from, then you can go ahead and sell one call option against that stock, which means collecting $40. And just like that, you've officially traded your first option. So it's possible to start small, get your feet under you, learn how the options market operates, and then grow into some of the other trades. Now, the additional trades on the show require even less capital to get started. The credit spread I'm looking at this week is on Cleanspark Inc., symbol C as in Charlie, L as in Lima, S as in Sierra, K as in Kilo. The stock ended the week at $12.25 per share. I'm looking at selling the July 12 11.5 put spread at 19 cents. That could give us a maximum possible loss of 31 cents per spread. Now you enter this trade by selling the July 12 put at 57 cents and concurrently buying the July 11.5 put for 38 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $12 per share. The break-even price on the trade is $11.81, and in real terms, you'll receive $19 per spread that you sell and have $31 at risk. And the reason on the credit spreads I talk about the maximum possible loss is because when you sell a spread, right, just a little tutorial here, when you sell a spread, the highest amount of money, your highest return, is the amount that you collect from selling the spread. And you're hoping that spread expires out of the money, which is the reason why I only talk about the maximum possible loss when it comes to selling a spread. Now that flips when I talk about the debit spread in a moment, because the amount of money you pay is the most money at risk, and then you're hoping to gain, right? So for those of you who are like, well, he only talks about loss on the credit spread, but he talks about gaining on the debit spread, it's one and the same. It's just that one of them you're selling first, so you're collecting money up front, and then there's a possibility of having to give money back, i.e. you lost money on the trade. And then the other one, you pay more, you put more money down with the possibility of gaining more money in the future, but there's also the possibility of losing all of the money that you put down. So apparently it's tutorial day. I hope you guys enjoy some of that. I know it offers clarity because some of the emails I can tell people just aren't totally clear. So hopefully that helps out a little bit. So let's get into the debit spread, the final trade on this week's show. We're looking at MARA Holdings, which used to be known as Marathon Digital. That's symbol M as in Mike, A as in Alpha, R as in Romeo, A as in Alpha. The stock ended the week at $17.66 per share. I'm looking at buying the July 17.5 call spread for 30 cents. That could give us a maximum gain of 20 cents, or that would be a 66.67% return in 2 weeks. Now you enter this trade by buying the July 17 call for $1.31 and concurrently selling the July 17 half call at $1.01. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $17.50 per share. The break-even price on this trade is $17.30. In real terms, you'll pay $30 to enter the spread, and your maximum gain is $20 per spread. So that's it for this week's show. I hope you guys don't mind the tutorial this week, but I know it's going to help a few of you. So if you already knew it, just ignore it. And if you didn't know it and you have any additional questions, just shoot me an email. I really will answer it and possibly even hop on the phone with you. So have a fantastic weekend. Like I said, if you're in the U.S., happy Independence Day. Happy 4th of July tomorrow. Be safe. Have fun. Enjoy your friends and family. Don't lose any fingers or other body parts while shooting fireworks. I'll have to keep that in mind as well. Fireworks can be a lot of fun. And if you're out on the boat or on a lake or anything, just, whatever you're doing, be safe, be smart, and make it to Saturday so you can continue enjoying your 3-day weekend. And get rested because we're still at all-time highs. So Monday, Tuesday, all next week. I mean, it's summertime. Normally the trading slows down, but we're at all-time highs. So there's plenty of fun to be had, plenty of money to be made in this market. So that's it. Have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.